2020. I have a weekly chart on Amazon, made a move today. It was so oversold. This is a weekly chart. We are fooling around with the weekly moving averages. We're still below the 10-week right here. We're right there teeter-tottering on it. This is where the top end of that reversal is. Earnings are coming up. 33.50 was the last highs in the rallies. They slammed this thing. This is what it looks like on a daily. Now, we're very bullish
Market
on
data
it.
connection re-established.
The problem that we're having, the green line is the 10-day, so we sold down. The 50-day moving average is at 31.65, and we're just slightly below it. Then we know down here is the 150-day. So, yes, the percent K at the time was 1.9 on a daily. I'd never seen it that low on a percent K on a daily chart on Amazon, and the whole time I've traded it ever since it's been public. It doesn't matter. What this name has done is it sells off, it gets above the 50-day moving averages every time and sells down. Well, that is a daily doji reversal up, and we featured it a couple of days ago. So what we did was we got the call options, and we also, just to protect the overnight risk, we bought the 3,200 puts overnight in case the thing gaps down on us in the morning. We'll cash that in and then let the trend run higher. But we have to have a close above these moving averages. Until then, it will remain a trade until it gets above the 50-day, consolidates above the 50-day, and can run higher. If we gap down, we'll cash out of the put options and then hold the long side of the trade for the calendar earnings coming up on the 28th. We bought the call options for February 5, 2021, and we did. So basically, we're teeter-tottering right here, and it's very important to understand that hedging overnight is the right thing to do in case it gaps down. We don't know if it gaps down until later in the day when we find out where the NASDAQ 100 futures are going to be. It is right there, breaking that last reversal from the highs of 33.50. Oh yeah, that was a great move up there when it ran up there. And there's a lot of upside here on Amazon, believe me. And stochastically, percent K wise, the other day, that percent K, like I said, down there at 1.9, 5.5, 3.8, never seen it that low. And that's why we bounced into resistance, and we did. So that's the first pass on this trade. So as we move into tomorrow's trading session, we're going to see if we can hold the 50-day moving average. And if we can get above it, then we'll take off the puts and then we'll let the call side keep running. And that's exactly what we'll do. We're all about managing the risk short term overnight to protect the account. And that's exactly what we're doing because of the history of this stock. Today we sold out, cashed in, then it went up, and today was that one day. We've seen these kinds of trends before. Maybe they get a day, day and a half, but then they always fail. So we don't know that this fails because it's the cheapest stock on the planet. But it doesn't matter. What does matter is protecting the account. We have the February 5 calls. They report on the 28th. They aren't gapping below that 50-day at the moment, but we're not above it either and whatnot. So until we know which way we're going with this thing, then we'll keep that other side of the trade on. The other side of the trade is if we do come down, test support, we'll cash in the put, bam, buy more calls and take it higher. That is how we do trade management. 3,200 put, short term, February 5th, we have the calls up and out of the money.